All right, everyone. This week, no show and tell. Instead, updates on our markets, what we focus on, which are growth stocks and crypto, because there is a lot going on, and let's get going. All right, let's start with crypto. All of you by now know that Sam Bankman-Fried, who was once lauded as the JP Morgan of crypto, as the Warren Buffett of crypto, his company has declared bankruptcy. It turns out that he was essentially doing something that was like the equivalent of kind of like Madoff, Lehman, and Enron. Bottom line to it, it was a fraud. There's going to be no money or little money left for anybody that was invested either in his hedge fund, in his currency, which was FTT, or anything associated with that. Now, thankfully, we have no involvement with Sam Bankman-Fried. We have no direct exposure, or as far as I can tell, any indirect exposure to it. And let's start there with our companies that are associated with crypto. The stocks that we have in across our portfolio, stocks like Coinbase, Robinhood. These are companies that allow you to buy and sell crypto, and they also custody or hold it for you. Both of these companies are US regulated companies. They have financial statements that are audited. And in my judgment, in my opinion, and remember this channel, opinion, not advice, these companies are actually going to benefit from what is going on. Why? Because while many people can talk about not your keys, not your crypto, which, by the way, is something that a lot of people say. In other words, if someone else is holding your crypto, people claim that, well, it's not your crypto because theoretically, well, they could sell it, they could do something. The other side of it is that it is sort of technologically a little bit difficult to hold your own crypto. You have to store your digital keys someplace, never lose them. And there is a lot of history of people losing their keys and losing their access to crypto. So the best thing, in my judgment, in my opinion, do is pick companies that are trustworthy, look at their managements, look at their histories, and make a judgment. And in my opinion, Coinbase and Robinhood are perfectly good places to leave your crypto. I leave crypto at both of these places, reflecting my judgment in terms of their likelihood to survive, their likelihood to follow through on being good actors. So those are two companies that, many people today are saying, oh, everybody's going to take their crypto out. But I believe it's actually going to be the opposite, which is that you are actually going to see money flood into Coinbase, flood into Robinhood, because they are the good actors in this. I mean, they have no history of having done anything problematic. They are companies that issue regular financial statements that are audited. And yeah, financial statements, they can be cooked, but the thing is that there's no guarantee in life. There's no 100% protection of any kind. There are always risks. And if you're a person that worries about that, then the only alternative is to really custody your crypto, your digital assets on your own. You would get that by getting what's called a hard wallet. And there are any number of YouTube videos and stuff like that where you can go and watch how to do this. Personally, myself, I leave my crypto on places like Coinbase and Robinhood myself. So that's one issue that I want covered. There are other stocks that we own across, for example, our gold tier services. MicroStrategy, which has made this gigantic bet on Bitcoin. They own, I don't know the number offhand, but it may be 55 or 60,000 Bitcoin. A huge, huge bet. And the man who has made this bet is the CEO of MicroStrategy, Michael Saylor. He's always on evangelizing about Bitcoin. So you can go read up, his basis for thinking it. But in essence, it's really, more or less what we have told you why we like Bitcoin. In other words, human beings, we eventually come to a point where we want a store of value. In another time, it was gold. In another time, when the dollar was backed by gold, it was US dollars. Today, it's mostly in fiat money, in other words, unbacked money, and then in assets, stocks, and real estate, and now in crypto. And but around the world, they don't have many of these choices. Many countries, you can't really get gold very easily, or if it is, it's so big that you can't really buy an entire bar. Um, in other places, their financial systems are so difficult that, real estate, you can't prove ownership. There's no stock market. So there is a need for a universal store of value. And in my judgment, my opinion, Bitcoin fits that. It is finite, 21 million coins, is portable. You can take it anywhere on your phone. Truthfully, you could write a code down and take it with you. And it is divisible. So it is a solution to this issue of what's called sound money. In other words, money that cannot just be printed into infinity. So the underlying case for MicroStrategy buying Bitcoin, in my opinion, still sound. Is it going to work out? Well, there's no guarantees. However, if it does work out, MicroStrategy stock is going to rocket up. I mean, because essentially they're acting like a giant account for Bitcoin, and they own a lot of it. And there's even talk that he might buy some more. So MicroStrategy is one of the stocks that is in that crypto realm. Another one is Silvergate Bank. So this company provides various banking and accounting services to the crypto economy, to crypto companies. And they came out yesterday and say that they have no exposure to FTX. FTX is actually a depositor at Silvergate Bank, but they don't have loans out to them. In other words, they're not going to see losses of any kind. So this is another company where, the taint of crypto might, push its stock price down. However, they actually are going to end up being a net beneficiary because, hey, they were unaffected, and they've got all of their capital. And also it will have shown that that they have some kind of judgment by not having lent money to FTX and Sam Bankman-Fried, who, was really everywhere. I mean, FTX's name was on top of a stadium in Miami. Sam Bankman-Fried, as I mentioned, was profiled in Fortune magazine, in just about everywhere. I mean, this man really got around. He was testifying in front of Congress in terms of how crypto should be regulated. So to have said no, to have not have participated, really does show that people saw through whatever it was that other people couldn't, and it shows that they had judgment, and that matters. Now let's go to the cryptocurrencies themselves. Does what happened with Sam Bankman-Fried, FTX, change the underpinnings for crypto? In my opinion, no. Why? Well, Bitcoin we went through. The world wants a digital store of value. We're in the digital age. We want a digital store of value. Bitcoin is what we have sort of commonly agreed upon, in my opinion and in my judgment. And if anything, we are likely to see flows into Bitcoin because it is the crypto store of value. And my reasoning for this is that when you go and read about Sam Bankman-Fried or FTX, you hear very little about people wanting to simply leave crypto. What they really want is a better form of crypto, because in the last bull run, we really had a lot of very, very highly speculative crypto go up. They were sometimes called rug pulls. Sometimes they were just out and out, just kind of like scams of they claimed that they were going to deliver some benefit through an app. They never did. So there was a lot of stuff that was wrong with the last bull run. I mean, it still made a lot of people a lot of money, made them happy. But still, what it did meant is that, like, the average coin, the average token in crypto, its quality was quite poor. And now we're going to be much stricter about what we look at. We're going to scan for quality, scan for real capabilities, real utility. And we're going to get down to, in my judgment, my opinion, 20, maybe 30 crypto that people will feel are deserving of the money. And the number one crypto that's going to get the vast majority of the money, in my opinion, is going to be Bitcoin. because it has got wide universal appeal. The next one that is going to get money in all likelihood is going to be Ethereum as well, because Ethereum has established itself as the blockchain and the currency for decentralized finance, which is another area which will benefit from this. Because remember, FTX, this which is a cryptocurrency exchange, was a centralized exchange. In other words, they didn't really use the blockchain for their own purposes, because if they had, you would have been able to see the fraud as it was going on in real time. So these cryptocurrencies, once sort of like the negativity passes out, the higher quality cryptocurrencies, the ones that are bigger, the ones that can show you that they have quality standards, that they're really doing the right thing, that they are the good actors in this business, they're going to see more money come in. Because in my seeing of like what's going on, almost nobody's giving up on crypto. So it's very unlikely people are going to go buy even more speculative assets. They're going to now want higher quality assets, and that benefits Bitcoin, Ethereum, and yeah, even Dogecoin. Yeah, people may laugh, but still, Doge effectively is sponsored by sort of Elon Musk. I mean, and it has been around now almost as long as Bitcoin. So it has got wide, universal recognition. A lot of people own it. It is used in some communities among artists, for example, as payment. It's got a very low price, which is of high appeal to lots of people. And it can act as a medium of exchange. And I would expect people to say, well, there was no scandal with Bitcoin. People can laugh at its premise, but there's no scandal. There's no fraud. Dogecoin, if you bought it or sold it, well, it's still there. And yeah, the price varies relative to demand and supply, but still, it's still there. There's no fraud. There's no problem. It is a sort of a very cheaper version of Bitcoin, as the people's Bitcoin, if you will. And to the extent that Elon Musk may do something with Dogecoin, with Twitter, to give it more utility, more adoption, well, then people are going to start to store Dogecoin, which will increase its scarcity, and its price would lift up. Remember, opinion, not advice. Finally, let's get to growth stocks. All right, so growth stocks have been in this horrific, I mean, historic bear market. I mean, this is as bad as what we experienced really in 2000, 2001, 2002. 90% drops, just commonplace. I mean, there's in 2022, from sort of like March to about now, I mean, the number of companies that, had 20% drops in a single day for any, on any kind of news is very reminiscent exactly of what unfolded in 2001 and 2002 and 2003 in that bear market. The big difference is this, that these companies, you can go see, they are growing. The vast majority have enough cash. They don't have any debt. And now we finally have the first signs that the macro situation around inflation and interest rates is swinging in their direction. It does look like inflation is peaking out, which means that somewhere in the next 6 or 9 months, the Federal Reserve is going to stop raising interest rates. And then as the old world companies, which are now heavily indebted and now really very extended in terms of how much they have promised investors in terms of buybacks and dividends, that's going to be a huge weakness for their stocks. And then, of course, for their companies, because they have too much debt. They put up too much production in 2020 and 2021, expecting that the boom times after the lockdown ended was going to continue. And so they're going to struggle, and so much money pushed into those stocks from about November of 2020, from November of 2020 onward, where there was this huge reopening trade, and all of these stocks got these huge, massive jumps. And really, most of these companies are simply going to revert back to where they were pre-pandemic, and they have no growth prospects because nothing's really changed underneath there for them, which is that the demand for what they produce, best case, is going to grow at 1 or 2 or 3%. Many of them are going to see negative growth. But one thing that it has changed permanently is the amount of debt that they took on over these last 2 years, which now they have to pay off using shrinking amounts of sales. And also then they have these big commitments on dividends and buybacks. The buybacks support their stock at very, very high levels. The dividends keep people locked in there. But dividends now have competition. Bond yields are much higher. And their stocks, without the support of buybacks, are going to be much more volatile. So fewer people are going to buy it. So they're in trouble. And that's a source of liquidity for us. In other words, that money is coming out of these stocks and is going to be searching for stocks that have some growth. I'm not saying all of that money is going to come into our stocks, but some of it is definitely going to be coming our way. Because the one thing that I know from being in markets is that markets are always looking for growth. They're either looking for sales growth, earnings growth, dividend growth, amount of money being set for buyback growth. They're looking for growth. Most of those things are not available in the foreseeable future for these companies. So investors that want growth are really going to be left with one place, which is that for growth stocks that have been growing, they've got enough cash, and they've got a runway of growth that is just endless. I am obviously very bullish, very optimistic, very positive on what I believe is going to unfold. It's been a very, very difficult year, 14 months for growth stocks and crypto. But really, what has gone on has really kind of cleared the plate. We've got low valuations. We've got growth that is still there. We're now going to have a macro environment that favors these stocks and where people are going to come into these stocks. And as they come, they will bid prices higher. Those prices getting higher first, obviously, for any of you that bought at higher prices, reduce the loss. I'm sure some people will sell on the way up, but still there's going to be more and more demand because growth is about to become the scarcest thing on the planet, and growth stocks have it. And quality crypto, including the ones that we own, things like Bitcoin, Ethereum, Doge, and others, those are going to get bid and going to get bid up. Hard to accept right now in the middle of all of the scandal, but if you'll see, you go study history of asset prices, the bottoms are made when there is gloom, when there is doom, when there is pessimism all around, and that really sets the floor for the next bull run, which then goes to new highs. So I am BOP on our stocks, on our crypto. It's been tough to be strong hands, but hey, that's what the markets require and push you to do, which is that to earn the big money, to make big returns, you kind of have to endure through the pain, the difficulty, and the pessimism and the gloom to really get the big gains. So that's the video for this week. If you like it, give us a thumbs up, subscribe, and also check into my free Substack, which is paulmampilli.substack.com, or else paid services at atgdigital.media. And come back next week. This is Paul saying bye.